Welcome back. Today, we're diving deeper into the benefits of using arbitrage strategies on Luno and Binance. This time, I'll give you real examples with cash calculations to show how this strategy works in practice. Arbitrage is a trading strategy where you profit from price differences for the same cryptocurrency on two platforms. You buy on the platform with a lower price and sell on the one with a higher price. Let's say you're trading Bitcoin, BTC, between Luno and Binance. On Luno, the price of one BTC is $30,000. On Binance, the price of one BTC is $3,200. The plan is to buy one BTC on Luno for $30,000, transfer it to Binance, and sell it on Binance for $3,200. Now let's calculate the profits. The buy cost is $30,000 on Luno, and the sell revenue is $3,200 on Binance. This gives us a gross profit of $3,200, $30,000, $200. Next, we need to consider the fees. The Luno trading fee is 0.1%, which is $30. The Binance trading fee is also 0.1%, which is $30.20. The Bitcoin transfer fee, network fee, is $10. So the total fees amount to $30 plus $30.20 plus $10, $70.20. Now let's calculate the net profit. Gross profit, fees $200, $70.20, $129, $80. By executing this arbitrage trade, you'd make a net profit of $129, $80 for a single BTC. If you scale this strategy with higher volumes, your profits can multiply. Now, let's try a smaller trade with Ethereum, ETH. On Luno, 1 ETH is worth $500, and on Binance, 1 ETH is $1,520. The plan is to buy 0.5 ETH on Luno for $750, transfer it to Binance, and sell 0.5 ETH on Binance for $760. Calculating the profits, we find the gross profit is $760, $750 are $10. Now let's look at the fees. The Luno trading fee is 0.75, the Binance trading fee is 0.76, and the Ethereum transfer fee is $2. This gives us total fees of 0.75, 0.76, plus $2, $3.51. Now for the net profit, we have gross profit, fees, first here, $10, $3.51, $6.49. Even small trades can be profitable, especially if you repeat them multiple times in a day. Now let's discuss the key benefits of arbitrage on Luno and Binance. First, there are real profit opportunities. As seen in the examples, price differences can yield solid returns. Second, it's a scalable strategy. You can start small and increase your volume as you gain experience. Third, it's low risk. You're not betting on market trends, just capitalizing on price differences. Lastly, with careful planning, you can earn consistent daily profits. Here are some tips for successful arbitrage trading. First, use fast transfers. Time is money. Price differences don't last forever. Second, monitor fees. Always calculate trading and transfer fees to ensure profitability. Third, leverage tools. Use price trackers or bots to spot opportunities quickly. Finally, stay informed. Keep an eye on market trends and updates from both platforms. Arbitrage trading between Luno and Binance is a practical and profitable strategy when done right. As we saw in the examples, you can earn both on large and small trades. Start small, calculate fees carefully, and grow your profits over time. Thank you for watching. Don't forget to like, share, and subscribe for more crypto trading tips. See you next time.